July manufacturing technology orders are down, but U.S. manufacturing sector is not out. And there's some things that you can do to help make sure that as we go into 2016, you can set the landscape for continued growth throughout the year and end up with a year in 2016 that is as good as the 2014 we just visited. Hello, I'm Pat McGibbon, and I'm here to talk about the manufacturing technology order rates for July. Orders in July were down 12% relative to June, leaving us 9% below year-to-date numbers for 2014 to 2015. But this is not something that's unexpected. For one, when you take a look at the average of the June-July change over the course of the last 10 years, which included 2 recoveries, you've got an average of -8%. We have a -12 this year. It's not all that big a deal, and is in line with what we were projecting at the forecasting conference in Detroit in 2014. Our forecasters back then were basically looking at a modest decline in spending on manufacturing technology for 2015 before a modest pickup in 2016, basically evening things out, making 16 about the same as 14, which was a very good year. And I tell you, this is amazing in the face of what we've had to deal with as far as issues during the course of 2015. You start off the beginning of 2015 with the energy and mining industry just basically going through a collapse on capital spending because of the dramatic decline in oil prices. That market represents about 12% of all the orders we get in a given year for our memberships in our market. And that having that even drop by 75% is a really big hit on our numbers. Then you follow that with a spring Greek collapse and the challenges it brought to the EU financial systems, and it creates not so much an impact on our direct market, but starts having an impact on consumers' sentiment and on manufacturers' concern about making future investments in capital equipment. And then boom, August comes along. We have the Chinese financial and stock market collapse, which is in parallel is equal to about 15 to 20 different Greek collapses all happening in a matter of a week. Where that comes into play for us, it does have an impact on our manufacturers, our customers. It does have an impact on our markets because China has already devalued its currency to try to help grow its exports, and it's going to continue to try to grow its export because it's an export-driven economy. And that will have a great deal of impact on the competitiveness of American products, both here and abroad. So as we go into the fall, we're pretty much on track, given all these different issues that have occurred, pretty much on track with where we expected this market to be at the end of 2015, down about 5 to 10%. As we look into 2016, we're looking at some strength beginning to appear during the course of the latter part of this summer and through the fall. Forming and fabricating is doing really well in the South and West. The auto industry is still holding up a good portion of the cutting tool industry and the manufacturing technology that actually removes metal. And then you've got aerospace, which had 1 month in July of 2014 where they booked almost 4 months worth of orders, and they're working off that backlog, and it's creating a further demand for technologies used in the aerospace industry and by their supply chain. But really, if we're going to take advantage of this strength in the manufacturing technology markets here at the end of 2015, we've got to get our senators and our representatives to take action on the tax extenders. And that's where you can help. You need to reach out to them and make the point to them that this is really, really important to ensure that we have a continued strength into 2016, and when we get to the first or second quarter, end of the first quarter, beginning of the second quarter, we see those tax advantages coming back to manufacturers at a time when they are really going to need them to begin to do the replacement of equipment bought back in 2009 and 2010 when we had 60 and 100% growth rate in demand for our members' products, and to help ensure that there's a not just the confidence level boosted, but quite literally the financial issue addressed as well. So as we come to this for this fall in October, when we all meet again in Cleveland for the Global Forecasting and Marketing Conference, the second week of October, we're basically on the same track we were in last fall, looking for a modest decline in capital spending on our products for 2015, and looking for a modest pickup in 2016, again to put us in a place where orders are as good as they were in 14, and 14 was a very good year. With that, we'll see you next month.